Hi, this is Imran Vohra, and I'm happy to be on International Trade Live. Today, I'm going to be presenting the application of blockchain in maritime. Blockchain is another name for distributed ledger technology, and what I'm doing today is nothing to do with crypto. Though crypto is based on blockchain, blockchain is a much wider application and getting traction today. So I've been in maritime all my life and have been exposed to blockchain for the last 3.5 years and have been trying to see the different applications of it in the maritime industry. Mainly working through my company in the UK called the Marco Polo Network. So what I'm going to talk about is how blockchain works. First of all, in supply chain management today, because it's very active and being used by a lot of banks and retail outlets to connect their entire supply chain into blockchain. And why blockchain? It's because the way the blockchain works, as I mentioned, distributed ledger technology, it allows banks and financial institutions to receive and connect nodes with their clients who are basically either the big retailers or suppliers without having to go into a firewall. So if you know what systems are, if you have a cloud-based system, then all the participants have to have a login, and then they have to log in and get inside the firewall of the system. Blockchain attributes nodes, so the banks remain within their own environment and just exchange files. So they get nodes. So in blockchain, every participant, whether you are a supplier, a logistics company, a finance company, or a buyer, you all have your nodes, and then you come together to exchange files and have one record of file, and that basically allows the transaction to happen. So looking at blockchain, the primary objective is how do you move from exchanging paper? In supply chain, you have bills of ladings and a lot of other documentation where we can actually move everything to digital. And the biggest advantage of then doing digital is then you can automate. You can have rules, you can have matching engines, and and then also you can have banks can have their own sort of rules that require them to validate a certain transaction. So instead of doing that manually and having them pass through paper, you just digitalize it. And then you have the rules in, and as soon as the machine is trained, you can automate the entire trade. So the application for this is that banks would take about a few days and two or three people to go through, say, a letter of credit or a bill of lading presented, can actually cut it down into a few minutes of processing. So that's the whole idea behind why blockchain is gaining traction, is to reduce processing time and costs to approve invoices. For a buyer, that was the bank's perspective. If you go to the buyer, they basically, they issue a PO, you have an invoice, and then you need to match whether the invoice matches with the PO. And it takes time and effort and discrepancy management. But if you digitalize the whole thing, even if you don't do it on blockchain, and actually works, so then basically all the suppliers who have invoiced you properly and correctly, you can actually have that paid on time. Now, coming back to maritime, there are lots of applications of it. When maritime is a big key in supply chain management. So here, basically, we're looking at, in maritime, you have the bunkers where you have POs and invoices and bunker delivery notes that can be automated using blockchain. You've got procurement in maritime. We've tried and tested this in the cruise and other industries where everything was paper-based. POs, even when marketplaces were being used and POs were being issued, it went from being digital to paper-based, and then invoices being received, discrepancies being managed in Excel sheets. So what we're trying to do is use the same technique that we use by banks and big retailers in their trade supply chain into the maritime industry use cases. So here what we're doing is looking at particular use cases either in bunker procurement or goods shipment documentation. You put that into blockchain, and then you have real-time discrepancy management, which can allow shipping companies to reconcile across the entire supplier base. Okay. We look at how blockchain network plays in the P2P process. P2P obviously is a short form for procure to pay. So this is again another automation engine. So I mean, this whole map describes the entire supply chain process there, right from when you're going to issue the orders to completing the entire thing. What we are focusing now is a procure to pay model. Yeah. So what I am doing is looking at purchase to payment, the model where once a purchase has been placed by a maritime company, the invoices are received from the various suppliers. Both the purchase order and the invoices are digitalized, and then you have the rules set up by the company of when to approve and pay the invoices. So once the invoices are matching with the POs digitally and it goes to the rules, you can allow tolerance limits, 2%, 5%, or whole amounts. The whole idea is that the matching engine does that. So all say 70-80% of the goods are matched and they actually passed on to payment, and then the system then highlights and focuses on 20, maybe 25% of the unmatched ones, and has a reconciliation engine to either reject or ask the suppliers to amend the invoices and then correct them. So basically, it's really reducing the effort taken by companies or shipping companies to match what they've ordered to what they've received on board, and then focuses on you know discrepancy management here as well. Because blockchain allows different nodes, it allows lots of other companies, like we've been working with Microsoft on using generative AI to identify common errors that keep coming in, and then have different solutions being prompted to the user to allow for better and more accurate discrepancy management. So it's really exciting because once you digitalize everything and then you put it into the machine, there are various tools and resources that can be utilized. So that's what I'm going to. The advantage of blockchain is that you can have multiple nodes. You don't have to just have the buyer, supplier, and shipping company and bank. You can have other service providers that come in and provide tools. For example, if you want to do your carbon chain tracking and measuring, blockchain allows a carbon chain tracking company engine API to come in. If you want Microsoft to come in and do generative AI for resolution, so you can allow that. So you can have multiple nodes as required to come in and actually improve the kind of work that is being done. So it is really powerful once it is utilized. The main tool required is to digitalize everything, and that's what is the starting block for having blockchain enabled and working. So supplier pay, I'm calling this supplier pay rather than just calling it blockchain. Focuses on taking costs and risks out of the operational buying process. So whatever we've spoken now, there is a risk that what happens in a lot of times that I experience is that shipping companies and procurement department have millions of dollars of POs, and then they're receiving invoices and they're not able to match. And you have invoices that are pending for 3 months, 6 months, 9 months, sometimes for $400, $500, $700. So what they do is then they have a certain rule, because they don't have the resources to look at everything in detail. So what they do is they said anything under $500, they will just approve it, and they will only focus on the ones that are over 500. This is just an example from certain companies. But if you look at it, between $500 could be 300, 400, and if you have about a few thousand discrepancies that you've not managed, you could actually be losing millions of dollars over a year, depending on how big your procurement and your is. So basically, it looks at your POs, your invoicing process, how you do your payments, how you receipt your goods, how you handle your discrepancy and reconcile. So supplier pay actually focuses on these 6 items and helps you automate so that you can actually, your tolerance levels can go down to as below as $50 or even lower in certain cases. And we are actually now applying that to certain large procurement companies today. and seeing, in POCs how we can actually take it down from say 700, 500 to 200, then 200 to 100, etc. And I think it's really working. And it's once we start applying AI and generative AI, it's going to be even faster and better. So going back into the finance part, what is accounts payable invoice automation and why is it important? So Gartner defines traditional, accounts process invoices tools to automate capture, validation, and processing of invoices. Blockchain takes this further by using what is commonly known today as smart contracts. Smart contracts is just what you do is you have your paper contracts, you digitalize them, standardize them, and then you have rules to match them. So basically, what it does is takes the actual contract between a buyer and supplier, takes the agreement and codifies it, which means once the invoice and POs come in, the smart contract uses the contract and agreement to look at what was agreed and then verify whether the invoice and the PO match and follow the agreement. So it's actually taking contract handling and management to a higher level, and which is what is happening today in traditional supply chain and trade industries. Companies like Walmart, CVS, BJ's are all applying this, and banks are now also coming on board. So basically, it's time. I think shipping also looks at, the very traditional old ways of handling bills of lading or, other documents like bunker delivery notes or procurement, things. There is digitalization coming into shipping. There are a lot of e-marketplaces. So I think this kind of automation just enhances what is happening today, and makes things much smarter and faster. So what is the importance? Codifying the contract terms. Nobody has to go through and read the contract again and again. You have the contracts terms which are codified, and then basically you make a rule engine. So cost, so your invoice, your goods receipt, your logistics details can all be digitalized. That manner, what happens is handling disputes in an open and visible and transparent ways, which means once the system identifies that it does not match, it actually highlights the reason it does not match, what rule did it break, so both parties can agree, what is the outcome before it goes to payments. It drives more accurate and faster invoicing approval at lower cost for both parties. So the total cost of ownership for the supplier, that the way the invoicing to identify what's wrong, correct it, for the buyer to manage that is much faster and better. The average invoice approval now, we are taking this again from the retail industry, not specific, but what we basically found out was that the average invoice approval, just 20 days for large retailers, can be reduced to seconds for match transaction. The output is fully approved. You have a digital transaction and record for everything with every supplier, and then it can be used for then going to execute your payment and financing, whatever terms you have with your supplier. A lot of time is wasted on just reconciling, which is just taken away. So it's big benefit for the buyer and the supplier. So we then go to the impact, expected outcomes, and how a company like Marco Polo and there are others who are providing this, enable this. Why? So it's basically a contactless experience for the buyer and suppliers. It creates efficiencies. It takes out costs and reduces OPEX even for the bank. It's a fully automated workflow with reduced discrepancies to be managed, greater transparency, which is what everyone wants today, right? Remove the corruption, make everything transparent, easier to do business, superior supplier experience. And then you can add functionality. So you can add AI, you can add, vendor discounting, early payments, everything else. And the most importantly, it's scalable and configurable. So scalable, if it works for one company, it can work for 100 companies on procurement, but you can also configure it. So each company can have its own set of rules and sort of matching rules and engines that it wants to impose, but it can be applied that way. A company like Marco Polo, how does it enable this? Obviously, it has a smart contract-driven workflow. So the whole system has workflows which takes things from POs, invoices, and contracts and digitalizes it. It's real-time processing, so it's blockchain. It's live. Each supplier, buyer, bank, shipping company all have their own nodes, and they just feed in digital data. The matching engine and the contract compliance is actually the biggest part of the how blockchain Companies, networks are applying this. Open and visible discrepancy management, again, facilitating automated payment engines by connecting with banks and finance companies. Supplier self-service, the supplier themselves can see why something got rejected and they can correct it or provide further clarification. It's collaborative, so we can work with suppliers and buyers and shipping companies to customize it and fit for purpose, because nothing works right from the start, especially in shipping. Nothing is standard. You have to actually train and work towards actually making it. So when we start, for example, when we started with a big cruise company, we found that the whole engine, when it started from start to finish, still actually threw up only 20-25% of the work, and 75% still had to be looked into. But once we started working with the suppliers and the shipping company and their we actually found that we could actually then automate it up to 75-80%. So it needs to be adjusted. The most important thing that comes up is actionable intelligence and analytics. The system then tells you, okay, where are your biggest issues? Why are certain regions or suppliers failing? Is there a particular reason for that? Maybe one interesting thing we found out was when you had a buyer based in Europe and a supplier based in the US, one of the biggest reasons for it to fail was that the metrics. In the US, you have LBs, and in Europe, you have KGs. So all you needed to do to fix that was to have a conversion engine. The system tells you different kind of reasons. Integration is bi-directional. It can be into banks, coming from banks, into suppliers, into logistics companies. And as mentioned before, extensibility to external data sources and workflows. So we can bring in people who are providing, carbon chain or ESG kind of reporting, recording. We can get in AI sort of companies who are looking at the data and providing better analytics. So that's what blockchain-based firms like Marco Polo are providing today. So how does it work? How is a contract codified? The contracts are codified using smart contracts. So you take a digital contract, and I have seen how even physical contracts are taken, and then you pass it through an OCR engine to try and digitalize it, and then somebody comes in and corrects whatever errors. And if you have standard contracts coming in, the system then trains itself to read certain keys and terms, like in shipping, like a bill of lading or a bunker delivery note. You can train the whole engine to take a PDF copy and then just codify it. Then you look at the AP invoice automation. So once you have the contract codified, you look at, okay, each order creates a unique transaction based in a blockchain, which is verified and shared peer-to-peer. Invoices and logistics data are exchanged and immediately matched to order the contract. And the last step is those who are matched, are highlighted and approved. Those who are not matched need to be resolved. And then after that, it's basically payments. So once your invoices are matched and the contract is checked, the payments can be paid on time as per agreements. And then banks or finance companies can offer suppliers, or if a supplier has, say, 60-day terms for payments, they can actually get immediate payment on discounting, depending on what the rates, and there can actually be several players who can offer this. You can have the bank of the buyer, or a fintech company coming in separately and offering early payment discounting. As you've seen today, there's been a plethora of fintechs now coming in and offering these kind of finance options, and they can just be plugged into the blockchain and offered to the suppliers. So there's a lot of use cases that can happen here. And once that's done, it's settled and reconciled, and everyone is happy. Obviously, you have the ESG angle which can come in. So your whole supply chain, your buyer or your shipping company, you can have different kinds of ESG records being brought in by the blockchain with their nodes to measure that. Banks are now requiring that as well. And then the final part is the analytics that provides you everything, tells you how many invoices were discrepant, why were they discrepant, what can be done in the future, what was your ESG rating from source to till it was delivered, etc. So huge applications of this in blockchain. So basically, different case studies that have been there. So in this case, what we found and what we have discussed before is the manual processing, discrepancy management. What we were looking at a particular shipping company, actually a cruise company and procurement, where they had basically 120 days and more of invoices just being not being handled because they were discrepant and nobody knew why it was discrepant. And it required people to go in, open up the invoices, open up the goods receipt, open up the POs and see what is that. Then go back to the supplier and saying that you gave this, you delivered these goods which were 3 months back, and it was huge. And basically, you had suppliers then not agreeing on terms or not agreeing to offer or threatening, and the whole process was very painful. So it actually started with about 4 suppliers in the US where we had that. It started working with the suppliers to train the engine of what sort of invoices, do a conversion engine, look at the contracts, codify it. And basically, what we found that obviously not right from the start, but over a period of 4 weeks, we were able to digitalize, automate, and then stuff that was being delivered was either being reconciled or matched, or the suppliers were informed of what the discrepancy was within a few days of the order being delivered, rather than having to wait for a month. Basically, what it meant for our customer, who was actually the buyer or the shipping company or the procurement, they had improved contract compliance. They didn't have issues that they were not paying the suppliers because they haven't been able to resolve that. The suppliers were very happy because, first of all, they were paid accurately, and when their own invoices were not matched, they knew the reasons of what happened, and they were able to actually correct it and deliver the correct invoice online, or inform what had happened. For example, if they were asked to deliver goods of a certain description and those goods were not available, and they had actually replaced it, and that was agreed on the ship but not known to the office which was handling the discrepancy and the payments, it was all then explained. So basically, the whole thing was processed in a cost-efficient manner. Though in the POC or the use case, we did not get in the bank end because we were trying to solve this problem first. But as the next steps, we are also going to bring in banks and offer the suppliers early payment options and discounting, which the suppliers would definitely appreciate. So that's basically justifying the use case that we applied in Maritime. I mean, here are just basically some sort of workflows of how it works. Today, it's basically self-explanatory, what we have spoken before. This is just a workflow. So before the transaction, you have the setup that comes in. So in the setup, you onboard the suppliers, you tell them how that now the invoicing doesn't need to be sent by paper or email. It needs to be sent digitally in a format. There is a bit of training with the supplier systems to get the digital format in CSV or JSON or API. With the buyers, basically, we look at what are their rules for matching. So we create a program. We select the pricing, the contracts. We digitalize the contracts. We work on with the buyers what they need, and then later on get in the finance company as well. Then we obviously have to look at when the goods are delivered, what is the goods receipt or bill of lading or those kind of documents. How can we digitalize these and put them in? We've actually had a lot of work with a lot of forwarding companies or DHL or Century, who are able to actually provide the logistics data by API as well. And then we just basically do a dry run of the POs, the invoicing, the goods receipt, and the whole process is then put through in for testing. And then we actually have a whole discrepancy management engine of what happens when everything works well. It's green, it's fine. But what do you do when it does not match? So who should be notified in the supplier? Who should be notified in the buyer? What actions can they take? How is it managed? Do we get in further AI thing to help on that? So all that's set up, and then everything, once it's done and the setup, the final part is posting it into the AR and AP for the buyer and the supplier, and then the whole thing works. So I think the setup is the most important in automating that properly and training. the system to read everything and agreeing with the buyer and the supplier. And once it's set up, it should basically, after a few dry runs, work like clockwork. Just to then close it off, you have obviously the most important part is the payments. So the payments can be then automated as well in a similar manner, working. So early payments, basically you bring in your finance companies or banks. The banks then have their own rules for qualifying. So once the buyer has finished his process for matching and payment, the bank can put in their own requirements for financing. So during the onboarding process, the banks are given, or the finance company are given, who the suppliers are, who the buyers are. And basically, the beauty of this is that the risk over here is not on the supplier, but on the buyer. So big buyers, and the banks are happy to take a risk on that. The supplier, instead of getting in 45 days, gets the payment immediately after matching for a fee, and then the banks or the finance company collects it from the buyer. So this is just an elaboration of how that whole process works. It's actually very prevalent and working quite well today in the retail industry. But what we're trying to do is, obviously right now in shipping or maritime, we're still solving the first part of the problem, but we hope very soon we'll actually be able to get banks and fintechs involved in this part, in the maritime part as well, maybe in bunkering or in others. But so far we've not done it. It's working well in the, as I said, the retail network, which we want to replicate out here. So basically, a few final slides. Smart contracts in supply chain. So basically, this is basically showing you how smart contract works. You've got the contract, you have the event which you create, you define the outcome, and then you go into settlements. So that's how a transaction life cycle of a smart contract is. There are lots of companies in maritime who have now digital bills of lading, Boyle and the others, and we're trying to look at how they're solving the problem of digitalizing the document. We're looking at how we can take that digital document and create smart contracts and enter them into workflows. So basically, yes, the first step is to codify, which there are lots of companies trying to do that already. Then you have verify. Self-execute is what we have, both buyer, supplier, shipping company, and then you synchronize into all systems and payments. So today, global supply chains are connected by EDI, email, and third-party portals. So you have a lot of digitalization going on in the supply chain and in the maritime industry as well. As I said before, there are companies which are digitalizing bunker delivery notes, bills of ladings, SOFs. So what we are trying to do is using blockchain to connect all of them. To connect it to different systems, third-party suppliers, and then buyers and suppliers who are using different systems. They don't need to be using the same system. With blockchain, you can just connect and create nodes and create sort of standard data interchange rules and have it. And that's the beauty of blockchain. You don't need to change. If you're doing it digitally properly and your digital system can import and export files in a proper digital manner, blockchain can make it work. So you can have a bank system, you can have your own shipping companies, procurement system, suppliers can have their own accounting systems, and we just get it together, connect, make the rules, and then go on. So this can actually expand very quickly. And finally, I think Marco Polo is a company that I consult for, has actually worked in providing all this to various companies as well, and is actually live with quite a few retailers in the supply chain, and we are doing POC with at least 3 procurement divisions of large maritime companies within the cruise and the shipping sector. So that is my introduction to how blockchain is being applied into supply chain and specifically into maritime today.
Well, Imran, thank you very much for that incredibly detailed presentation. I'd like to ask you a few questions, starting with going back to the beginning of the presentation when you spoke about electronic bills of lading and smart contracts. With digital solutions like these, why do you think that maritime companies are still so reliant upon paper-based solutions?
Yeah, so I think these solutions have come because of customer demands and shipping companies not wanting to maintain paper. But the problem is that they've been looking only at one end of the problem, and shipping is a very rather global but also a local thing. So it goes from one port, goes through a different part of the world, and then goes into the other part. And then what has happened is that when it goes in the other parts, even though right from the start till it reaches that port, it might be okay for having everything digital, but the receiver or the supplier might need the bill of lading to get his customs approve the duty, or get his what they have incentives from the government, from tax to do that, or the bank might require an original in case there's a claim later on. So I think what needs to be done is that you need to have an effort combined with everyone, and including the government and port authorities, which has been painstaking, but it's actually improving as we see today. And I think there are different technology companies or blockchain firms allow for certain parts of the processes to be done outside the system when it can't be managed, which is where this will work.
And going back to the application of blockchain during the procurement process, which appears to be an incredibly complex one, obviously there's still a chance for error to occur. What would you
Yes.
say that the main risks are?
I mean, definitely, yes, the errors will occur because nothing is perfect. So the whole blockchain works on training. So maybe the rules that you put in were not good enough, or you found out that eventually the blockchain matching engine was supposed to green light 80% of the transactions, and only 20 which were actually having problems are the ones you focus on. But when you start, you find that it's the other way around. It's only 20% that's matched and 80%. So one has to understand that nothing works right from the start, because there's no perfect sort of rule, right? So you have to actually get into the process and start the process, and then you learn, and you look at things that you could do better. What should be your tolerance? What are the correct parameters? And it has to be both a two-way process, not just you as a buyer, but the supplier also needs to look at that and look at how they are able to provide better data, or the finance company coming, a logistics company. So I think it's an iterative process which it takes time. So nothing is going to work, you know, like clockwork from the start. Sometimes it takes a couple of months, not just weeks, to get it right. But the beauty of it, once it's right and it's working, unless something changes drastically, it just works like clockwork. But it'll never be 100. I mean, the whole idea of it is to catch most of the things that are correct, but highlight things that are not correct, and then have a separate process to manage that.
So just to finish off then, Imran, what would be your observations or your main predictions for the future development of blockchain and shipping?
I think what has happened is shipping in general is catching up, and has realized the advantage, not just the advantages, but the necessity to digitalize and use technology. Procurement is a completely complex process. In today's world, you can't have invoices that have not been paid for 3 months, or forget not being paid, have not been dealt with for months. Right? Suppliers and invoices, supply chain is becoming incredibly connected. And I think digitalization brings in tools and capabilities that give the advantage to a company to have better rates, better suppliers, better processes. So shipping companies are realizing that, and that is why they're all reaching out. They're talking to their banks, they're talking to suppliers, they're talking to others. How can we improve? And I think that's good news for people who are providing that kind of the services and tools. There's so much happening. I mean, we haven't even touched upon the capability of AI, right? How that can come in and help and resolve it. And in addition to that, you have so many other regulatory requirements. Now, companies and banks are required to maintain logs of what is your carbon spend and how you're going to offset it. And this is coming in by law, because ships are going to then be, especially if you go into the EU in a certain time, you have to have your ship graded, and you cannot manage all that you can't do it manually. You have to have systems and digital solutions that come in. So I think it's going to be, the future is very bright. But again, it's not going to happen immediately. Shipping, it takes its time, and it has to evolve. So I think we'll need some time for this to evolve. But this kind of technology is here to stay and grow. And then once it's in, it's going to scale. So that's what I feel. That the potential is huge, but again, it's going to be painstaking to implement.
Well, I think, as you said, only time will tell.
Yeah.
Thank you very much again, Imran, for joining us today. And I hope you enjoy the rest of your day.
Yep. Thank you. Thanks a lot. Look forward to it.